Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday, and the date is February the 3rd, and this will be our chart lesson for the day. And before we get started, we just got a range day here today. You can see that we broke a little below it here, but then we traded back up. We actually found some resistance at the overnight lows, and so we kind of got hung up in a little range here just underneath the original range before we got back inside it. We traded, we didn't quite make it to the top, and then we turned down again. So this is a range day where we failed out a little bit at the top. There was two ways you could look at this. I would look for, generally you're going to come closer by finding the measurement of the range and then looking for a measured move. We didn't make that, so, and we really trended up the rest of the day, but all still inside this original overnight highs and lows. So the other way you probably should have looked, use your measured move tool here. And there's leg one, and then leg two started down from here. So you can see we went just a little further than a measured move and we reversed. That would have been a great second way to find your target, and that's pretty much what we had was two legs down, and then we got back inside this range, and see we just bounced off that low again just a few minutes ago since I started this video. And somebody asked me in the forum today how I could tell so early that there was a strong possibility of a range day. Well, first of all, it's experience from doing this every day. But the reason I know how, or kind of had an idea, is look at this price action, what it did in the overnight. Here's your overnight highs, and your overnight lows are right here. And then right at 8 o'clock, we bounced there again, just after 8:30. And you can see it holding. So, and you can see how things are just kind of going sideways, and we come back up to the middle of the range and turn down. Well, that gives you a strong clue that it's going to be a range day. Doesn't mean that things can't change as the day goes on, and it looks like it was going to change here, but we just made another leg down. Then we got back in the range, and we've been trading in the range the rest of the day. So experience is the main thing, main way that I can tell that. But when you come in the morning and the overnight highs are maybe like this is 20, that's a pretty big range actually, because it's almost 20 points. In fact, it may be quite 20 points. So that's a fairly large range. Normal times, 20 points is an average day, maybe even a large day on some days. But look for that, and you can see how the EMA is kind of like a roller coaster here. We're not, we pointed up, then we pointed down, then we pointed up, and then we pointed down, and prices are back and forth above and below it. That's another sign of a range. That EMA is a tool that we use. It tells you a lot. If that EMA is pointed up like that right there, and most all your price action like it is here is above the EMA, that's a trend. So we got a trend, even though this is a range day, we got a trend for the moment. Trade it. Same thing here. Look how the EMA is pointing down, and all your price action for the most part's below it. When we come back to that EMA, we turn down every time. That's a downtrend. So even though this is a range day, that's a downtrend. Same thing right here. Although you're getting price action back and forth more sideways. So even though that's a range, it's a very weak one and mostly sideways. But that's your clues, the EMA, how prices react to the EMA when they're back and forth, up and down, above and below it consistently. And this EMA looks like a roller coaster, or it's going straight across. That's a range. So look for those clues, and even then, things could change at any time. So just make sure you understand that. But that's how I know early in the morning if it's likely to be a range day based on how prices are reacting to the EMA versus the overnight and overnight highs and overnight lows, and where prices are in relation to that. That tells you a lot. And it gives you an idea of what you might look forward to today. And if you come in and this was the open down here and all the overnight straight up, and it's after 8:30 and it's still going straight up, it's probably going to be a trend day to the upside. And if it's come in and it's all straight down, like here's a good example of yesterday. When you came in 7 o'clock, it's all uphill, and you've already got a little channel there, and it just continues right on through the day. It's not straight up, but it's still it's a good trend. Look how that EMA is mostly up. Look how all the prices is mostly above it. Here you got prices below it for a little bit. We had a little correction, and then we continued up again. And then here you can clearly see prices above and below the EMA. Look how flat it is. We're in a range right there. That's how you know this stuff. And if you come in, see if we can find, seemed like there was a morning we came in, everything was down, but anyway, that's how I play that, and that's what you're looking for. So keep that in mind. That EMA and the overnight highs and lows and how prices are acting in relation to them tell you a whole lot. So let's back out, get through the trades, and wrap today up. And speaking of the forum, if you're still interested in joining, I'm still letting people come in for $10 a month now. If you're interested in joining, and it's cheap. If you can't afford $10 a month, you probably can't afford to be a day trader. And the only reason I charge anything for the forum is just so I can control it and keep people in, or keep people out that just want to come in and start trouble. And so I do charge a small fee for it, but it's basically, it's $10 a month. So, and that's how we're trying to do all of our support now, is through that forum. So rather than send me emails, if you're listening to this, it's okay to send me a basic email or two, but if you're wanting trading support and wanting help with your chart or your trades, please join the forum and go to the forum where I can better help you, and other people can help as well. Because the big problem is I just can't keep up with the emails anymore. It's too difficult. Getting 100 to 150 emails a day with trading questions, and trying to do my own trading, and trying to run the website and do everything on the back end, and do these videos Monday through Thursday. It's just got to be too much for me. And growth is a good thing, but those kind of problems creep in when you have growth too. So, I have to look out for my own personal interests as well. I enjoy doing this video every day. I enjoy doing the website. I love trading. I love everything about it, and it's fun trying to help somebody, and it's my way of giving back to some degree. So that's why I do a lot of this. But when it starts to be so big that so much work that I can't get it done in the day, then it starts to chip away at the reason I wanted to become a trader, and that was to get my life back and to get away from working 24 hours a day, 7 days a week, and making somebody else rich instead of, making a good living for myself. And so that's what led me to trading, and that's probably what led a lot of you here too, to get out of the rat race and to have a semblance of a life. And hope you can find that, and I hope I can help you find it. It's not everybody's going to make it in this. I will say, I didn't mean to get off on this tangent, but I'm here now, so I might as well go ahead. But I will say this as well. 90% of the people that fail as traders fail because they have unrealistic expectations. They come on the internet, they watch somebody, they watch a YouTube video where some trader says, look, you can make an easy $500 a day, and they show you a quick, easy trade, and they made $500. And so they believe they can do that. But it's not that easy. So don't believe those internet marketers and internet lies. This is not easy to learn. This is a skill, and you're trading against professionals that have been doing this. I've been doing this 20 plus years. Think about that. I've got tens of thousands of hours. It's just sitting at a screen, not even including what I spent studying and trading charts in the years in the past. And that's why I do this chart lesson every day. It helps. Not only does it help other people to learn the strategy, but it helps me because it forces me to study the chart every day. Otherwise, I'd probably trade and close it up and go play golf every day. But this forces me to, and I continue to, even today, I continue to get better and learn new things. So, but don't have unrealistic expectations. If you think you're going to come in here and pad your income or get some quick, easy income, working a couple hours a day from home, it's not that easy. You're going to have to spend a lot of time, a lot of hours, a lot of hard work, and a lot of frustrations, a lot of head banging. This is a skill. If you tried to walk into the World Series tomorrow, into the batter's box, what are the odds you're going to hit a professional pitcher in the World Series? Probably zero. If you got lucky, you might tip the ball or get a foul, but even professionals only get a hit 2 or 3 times out of 10. So the only way you're going to be able to do that, and if you got to go practice every day and you went to practice and those same pictures threw to you and you got used to it and you had practice, you had somebody showing you the skills and teaching you, eventually you'd probably start to get a hit or two. Well, this is no different. You're stepping into the World Series of trading tomorrow if you try to trade live. And this is a zero sum game. For you to make a dollar, somebody else has to lose a dollar. And those professionals don't lose very often. They're hard to beat. They're smart. They're good. They can read the chart. They know what they're doing. And you don't, no matter what you think, no matter how many books you read, no matter how many manuals you read, no matter how many videos you watched on somebody showing you how easy it is. You can watch somebody trade all day long and never do it. You don't learn anything watching anybody else. You might learn some of their strategy, but you're not ever going to learn to trade watching somebody else. You're wasting your money and time if you're going to trading trading rooms and stuff like that. You're never going to learn from those people because you have to learn to do it on your own. Their tendencies will be different than your tendencies. Their skill set will be different than your skill set. The way you get better at this is to trade every day and then study your own trades and then study the chart after it. That's all you need. But anyway, I'm going to get off that soapbox. I'm going to get back to the trades here because I've spent 11 minutes and we hadn't talked about the first trade. But anyway, 7 o'clock comes right in here as we're coming down and starting to bounce here. And you can clearly see we're in this range. And you can see two legs back up to the top of the range. It also confirms that trend line and leads you to believe that this little spike and channel down could be a trend working down. You can clearly see the support here, though. So you got to have room to scalp out. But there's a clear two legs up there and a little failed break back out of this range. We actually failed out of it right here, but that was much earlier. And a little small bar, not very much risk, a little room back to the EMA. I like going short here. The bias is down. You can clearly see the EMA. It's right off the key entry point. It's right off the resistance of the little range. You got plenty of room. Turns out to be a quick, great trade. Then you get another second entry here. Notice how we pushed lower here. We failed out the top and went right on through and came back. And we turned down right off the EMA. There's also pretty much a failed second entry long there, and this is the second attempt for it to go higher that fails. It breaks higher and turns down all in one engulfing bar. I like going short there. And you should get another leg similar to this one. If you measure that leg, and you can see we went a little further down to the lower side of that trend channel. So that would have given you a nice target. And of course we bounce. No setup there on the first entry. You get a lower high here. It's not a great setup because I think what happens is I think this breaks lower, turns and goes up, and then trades all the way back down. So you'd have to wait for that bar really to close. And but there's still plenty of room here. And so you might take that lower high. That's the first break of the trend. As long as you got room to get out before you hit these lows, because you may only go one tick lower on the new low, and you may not even get a new low. Like here, we really didn't get one before it bounced again. So I'm not crazy about that one, but it is still off the key entry point. We just had our first break. There's only one leg down, so you'll probably get another one. And that's what transpires there. So it's just a little aggressive, but you may take that trade. Then we're just going sideways. There's no real rejection off the lows here. And then we break out. You get a lower high here. Plenty of room back to the lows. And you see where it bounces. This is why you got to have room to get out, because look where it bounces, right at the same lows, and it goes higher and would stop you out if you couldn't get out. But as long as you got room there, take that trade on that lower high. We run up. You make a lower high, then you get a failed second entry long. Technically, you're not trading this as a failure. It's more of a trap at the highs, the triple test, and each time it makes a lower high, and you still got a little room back to the EMA. Look at all that resistance across there. We're probably coming back down. You don't know that it's going to keep going, but you're just looking for it to come back down. And this turns out to be a pretty good trade, and you probably might get a runner off of that one. Unfortunately, you only get a first entry on this trade, so not a good setup there. Although you could look at that as a failed second entry long. Notice this high up here, first entry, second entry. It's not ideal second entry, and it's at the lows, and so that's another problem with it. At this point, it looks like you're just going to have a slight failure, and there's too big a chance of getting trapped. Although there is room to scalp out before you get back to the lows, so that's another one you could argue if you want to be a little aggressive. The real problem with this one is it's not even your signal bar. This is your signal bar, but on a trap, it doesn't matter. So with that bearish bar, you may take that trade on a failure. Runs down. There's actually two legs back here. Even though it's made a lower low, there's two legs back, but that signal bar is not bearish enough. And there's two, and you're still thinking now we may get a failed breakout. So no reason to go short there. We continue on down though, and then you get a second entry here with a big bearish bar. Go short right there. That's the first break of that trend channel. We'll probably at least make a new low, or at least an attempt at it. You can see we did. We made two legs down and it bounces. And notice how we're running up. And you get a failed second entry short there. Not close enough to the EMA. Actually, it never triggers right there. It doesn't trigger to here. So really, your failure triggers here. But at the same time, you get a failed breakout here. So there's a couple of different reasons to take this trade. Notice that you go short once and then twice. And we never really traded higher, so it hasn't failed on that second entry short yet. I don't like going short there. It's too early because we may come all the way back up to retest this, and it's too much congestion. But when we fail out, if it breaks higher again here, then it's a failed second entry short most likely, but it's also a failure out of that little tight range. So when this breaks lower and turns and comes back out the other side, go long right there, as long as you got room to get out by there. But it doesn't matter because this is definitely going to trap some shorts. And look how that's what causes that to rocket up like that, because all these shorts got trapped. They thought they were going, the trend's down, we're going lower. They're not good enough chart readers to realize that we've already had a break, two legs to a new low. We've had a break out of here that hadn't come back and tested this yet. And so we're probably coming back to here to test this at a minimum, even if we're going lower. Prices almost always, that's why prices fail. Even if they're going to go lower, they usually fail on the breakout because they're going to come back and test that support. And notice we shot through there and we never came back and tested it. We tried, we couldn't get back up there. And even here, we tested it multiple times, but prices couldn't go lower. We just got stuck in this little trading range. And I don't think you want to go long here or short. I mean, there's a couple of possibilities. There's a short there maybe. There's a long here maybe. Problem is that signal bar is no good, and this one's really an inside bar, so it doesn't really count, although we did break lower here. Then you got 3-bar matching high, so there's just no really good chance to go long or short. Just sit tight here. And then you finally break out, you come back and you test that low again, you push back out again, you come back, and now you test that support on a second entry long with a pretty good signal bar. I like going long there because you're going to probably get at least a second leg up like that one right there. And notice you got plenty of room. We actually just keep going here. And then when you're working down, there's no other longs in here. You don't get any other setup. And then you're working back down. So it looks like by this time you could easily find this channel. So it looks like prices are probably coming back to the trend line. But notice you're working down. You get a break, a move down. Normally I'd tell you need to wait on a higher low. But this is I think that's like 4 ticks right off the key entry point. And you can see prices bouncing off that. You even got a little room back to the EMA here, probably maybe enough almost to scalp out. So you may take that trade. I like it just simply because it's off the key entry point. You've already had a break and a new low. It's very low risk because even if you're wrong, you're going to lose 4 or 5 ticks at the most. And if you're right, you might get a chance to get something like that right there. And off it goes. We run up, then we start running sideways again. Notice you got a double top. I treat that like a new high. First entry, second entry. So there's a second entry long at the EMA. That's really not good enough considering this is kind of in the middle of the range. But if you notice, you got that support, and it's like a little failure trap right there. So a second entry long with the trend off the EMA, off the support, relatively small bar with plenty of room to scalp out. I'm going to take that trade. There's a higher low right here, but you don't want to go long right into that. Too risky. Even though you know prices are probably going higher, you need a better setup than that. We come back to the key entry point again here, but it's just a first entry. It looks a little like two legs back, and this is pretty strong trend working higher here, and you figure we're probably headed up here to test the overnight highs. But again, I don't think it's worth risking up there. We finally turn down here. Come back to the trend line. There's no setups here. You can easily see this channel's in play, and there's no bounce here that's worth trading. So that takes us into 2 o'clock. So really, noon was the last decent trade you had. And then notice how things just slow down there, and there's not much else into 2. So the volume got really light after lunch. Not sure what's going on there. Picked up a little bit late in the evening. And notice how we bounced off that support, that range low there, and it's been straight up. That's what rejection looks like off a low. That's what you want to see. When prices come back down and they just hang around like that, there's no rejection there. This is what you want to see on a rejection. Although you don't get a very good setup there. It's not a time you'd want to trade that anyway, but I'm just showing you that as an example of what rejection looks like. Prices hit that and instantly turn and rocket it away. That's rejection. Strong rejection. So evidently there were a lot of people that there were probably still a lot of buy stops left down here, people that got left behind. So when it comes back, and notice where it came back to, it comes back to that same low that I'd marked from early this morning. And boom, off it goes. So anyway, we're not too much over 20 minutes here, and we got through them all. So I'm going to wrap it up. I'm not going to beat around the bush. I spent 11 minutes on soapbox kind of stuff, but some of that needs to be said occasionally, and I hope it's helpful to some of you. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.